Welcome everyone to Vested Interest. This is Shane, and in this video, we are going to cover the $1,516 I added to the portfolio. I do these weekly portfolio updates every Sunday morning. Typically, I did not put this one out on Sunday. Obviously, you're going to get it on Monday afternoon. We'll talk about that a little bit more here in the video, but I do want to cover the portfolio update. I put these out every week so you can see them. But before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. Now, for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks in growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio on a weekly basis. That's what this video is, my weekly portfolio update. Again, it's a day late, but better late than never. I also do bigger purchases if I get some extra funds from a bonus or a side job, something like that. It is free to see what I'm doing in my portfolio. There is nothing to pay for. We all have enough to pay for. We all have enough bills that keep coming in every week, every month, every quarter, every year. So again, it's free to see what I'm doing. But if you would like to help out the channel, if you could do me a favor and hit that thumbs up button down below if you find any value in this content. If you are a dividend growth investor, make sure you subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Click that notification bell so you're notified whenever we put out any new content. Along with the weekly portfolio update videos, I do a stock pick of the day series Monday through Thursday whenever the market is open, where we cover a stock that's pulled back on the day. And if you have a company you'd like me to cover in that stock pick of the day series, go ahead and drop it in the comment section down below. And let me know what you think of the video and what you added to your portfolio last week. Again, I know this is a little bit late. It's going to come to you in a new trading week, but this is the portfolio update for the last week that was supposed to come out yesterday on Sunday, and you're going to get it Monday afternoon. And I really do appreciate everyone who's taken the time to do that. Make sure you watch the videos to the end. Watch time is one of the metrics that the YouTube algorithms also looks at. So again, make sure you hit that thumbs up, subscribe to the channel if you haven't, join us on this journey to financial freedom, hit that notification bell so you're notified whenever we put out any new content, and drop a comment down below. Let me know what you think of the videos. Let me know what you are buying, or let me know what you're selling. Maybe you're selling stuff. I know markets are almost at all-time highs again, so maybe you're taking some profits and sitting on some cash. I'd love to hear from you in the comment section down below. Now let's get back to the video here. And there it is. Now, typically we cover the options. We did not have any options hit. We did throw out several. Actually, I was glad the one that I threw out for BABA did not hit because it blew way past that. BABA has really exploded, as well as some other ones that I threw out. Comcast again, Johnson & Johnson I tried, didn't get any bites there. So there were several others that I put out there. I think NextEra Energy was another one I ran, but didn't get a bite on. But no options to cover for last week. And here you can read it. This is why we didn't do a portfolio update on the weekend. A couple things happened. One, typically I get in on Fridays and clip what I need to out for the video and then do the video on Saturday. This weekend I went up to my parents. I took a little break on Friday afternoon and went up to my parents on Saturday morning after I pushed out a video early that morning. So I didn't work on the portfolio update thinking, well, whenever I get home, I'll go ahead and do the work and maybe stay up a little late and get it pushed out. And whenever I tried to do that, when I got home around 8, 9 o'clock there on Saturday evening, this is what my brokerage account told me. We're taking time out of for tech maintenance this Friday. Ally Invest, so it wouldn't have mattered if I jumped on Friday anyway, I guess. Ally Invest won't be available starting 6 p.m. Friday, and then they were not available again, at least for my brokerage account. My regular banking I was able to get into, but for my brokerage account, I could not access again till this morning at 8 o'clock. So again, apologies for not pushing this out last week, but I couldn't help it. So I'll try to do a little better. Maybe I'll just start getting in there before Friday, end of day Friday, and clipping what I need out for the video so I can do that, which is what I typically do. But again, looks like if I wouldn't have jumped in there by 6 p.m. on Friday, wouldn't have mattered anyway. Now that we've explained why we're a little late, let's get back into the activity for the portfolio and actually cover what you came to see. And we'll start off with dividends. We did get some dividends on October 1st from Vanguard Index Funds. This is ticker VTI, the total stock market ETF here. And this is what it is. It's all the United States stocks in the United States stock market. And I buy at least one share of Vanguard's total stock market index here, one share at least every week. So they finally paid us out some dividends here. I think this might be our second dividend payout we've received from them. But we did receive $33.20, and we do have the DRIP set, which stands for Dividend Reinvestment Plan. So that just means that anytime a company pays out or an index fund pays out, in this case, it goes right back in and buys more shares of the same company or index fund. So we picked up 0.11809 more shares with this $33.20, and this 0.11809 more shares added an additional 43 cents in passive income. And I know that's not a lot, but that is where it starts, right? It starts with small amounts, and eventually, through what they call the dividend snowball or the compounded interest effect, this will grow faster and faster. And that's what, whenever you hear people say the dividend snowball or the compounded interest effect, that's what you're seeing. So I've gone in and I've bought shares of VTI. Those shares of VTI have paid us dividends. Those dividends buy more shares. Those new shares add more capital, and that snowball grows and grows. So if I stop adding to Vanguard, if I stop adding to VTI here, at least 4 times a year, I will get similar. That's going to grow a little bit every time. Similar payout at least 4 times a year. Now we're still adding to this position, so that will help it grow even faster. And also on the 2nd of October, we received dividends from HP Inc., ticker HPQ. This is out of the information technology sector, paid us $66.16. And again, we have the DRIP set, so that goes right back in and picks up more shares. In this case, 1.90334 more shares of HPQ, which added $2.09 in additional passive income over the next calendar year. Now let's jump into the first new capital added to the portfolio. We added $540.51 on October 4th, and with those funds, we picked up 6 more shares of Vale, ticker VALE. This is a mining company out of the materials sector. We picked up those shares at $11.46 per share, and this is also a foreign company, so there are going to be some tax implications here around when they pay out dividends. You want to understand when a company like this pays out dividends, are you going to be responsible, or does your brokerage account take out the dividends or take out the taxes? In my case, my brokerage account takes out the taxes whenever dividends are paid. You just want to make sure you understand that if you have foreign companies, whenever they pay out dividends, you are going to be responsible for those taxes, or your brokerage account takes them out. Just know which way you're going with that. We also picked up 1 more share of Schwab Strategic Dividend Growth ETF, ticker SCHD. Now this is one of the ETFs I also buy weekly. There's VTI again. So these are the 2 that I buy weekly. We picked up that 1 share at $84.75. 4 more shares to our Haverty Furniture Company's position, ticker HVT. This is out of the consumer discretionary sector. Picked up those 4 shares at $26.22. And VTI, there's that weekly buy. Again, we pick up at least 1 share of Vanguard's total stock market ETF, ticker VTI, once a week. 1 share this week or last week cost us $280.14. Passive income added by these new shares, $13.01 over the next calendar year. Actually, it would be a little bit more than that, because right, you're going to pay out dividends 1 quarter, and it'll be a little bit more the next quarter, then a little bit more the next quarter. So this is just based on if it was the same payout 4 times over the next year, but it's a little bit more than that. And we also went back in on October 7th. We added an additional $975.59 to the portfolio. With those funds, we picked up 2 shares of Cisco Corp, ticker SYY. This is out of the consumer staples sector. Picked up those 2 shares at $74.75 per share. 1 more share to our Procter & Gamble position, ticker PG. Picked up that 1 share at $167.47. And we added 4 more shares to our most recent addition to the portfolio, Google, Alphabet, ticker GOOGL. Alphabet, most of you probably know it as Google, but it is Alphabet. Those 4 shares cost us $164.66 per share. Adding an additional, these new shares here added an additional $11.30. Total invested $1,516.10. Total passive income added $26.83. It's been a lot lower in the passive income added because a lot of the positions we're buying right now, SYY, PG, Google, SCHD is the highest dividend payout of those, but a lot of these are lower payers currently, but with some higher growth. Maybe not necessarily SYY and PG, but Google is very, very low, but hoping for some higher growth, even though it only just paid dividends this year. So not sure what the growth is actually going to be, but I'm hoping for at least double digit. 10% or greater is what I want. Now let's jump over to the sector and run through the sector allocation here. Communications makes up 10.63% of the portfolio. Consumer discretionary is sitting at 5.82. Consumer staples at 9.17. Energy makes up 5.85. Financials at 4.78. Healthcare makes up 13.84% of the portfolio. Industrial sitting at 6.35. Technology makes up 8.75. Materials at 8.94. Utilities makes up 9.25% of the portfolio. REITs and real estate at 8.86. And ETFs is starting to get one of the larger positions at 7.77. Eventually, this will be the largest slice of the pie just by the nature of me adding SCHD and VTI every week. Eventually, it will overtake the overall portfolio. Over here to the right, you can see the percentages here match the pie, and then as well as the dollar amounts allocated to each sector as well. All right, here it is, and I believe it's important for myself as a dividend growth investor and just a regular person like you out there to show you my portfolio weekly so that you can see the ups and downs of the market. Sometimes positions are going to go down, sometimes they're going to go up. That's why stocks have a 52-week low and a 52-week high, and they can bounce off that 52-week low or bounce off that 52-week high or set a new 52-week low or a new 52-week high any time during the year. That is the nature of stocks. They go up and down. So whenever you start to see red in your portfolio, don't freak out. That's part of the reason I want to do this, right? There's some red in my portfolio. That doesn't mean I'm selling out of all these positions, right? It just means they're down a little bit. But if I've done my research, they're good companies, they're still growing, the fundamentals of the companies haven't changed. Whenever I see red, that to me is a buying opportunity, and that is how you should take it as well. Actually, I hate to see all the green because to me, some of these, especially ones that are up, 51, 52, 61%, I'm not necessarily adding to them right now because they're a little above what I want to add to them. Now, I may nibble on them in the future whenever their cost basis is within reason. For example, Procter & Gamble. You saw I added to Procter & Gamble and SYY, right? They're both in the green. I'm up 16% on Procter & Gamble. SYY, I'm up 9%, at least as of the close of business last Friday. And I'm adding to both of them. Well, it's because my cost basis is so low, right? SYY, for example, $68.74, and I just added to this. But I can add to it up to $71.57, right? So I want to keep this 15% of a 52-week low and my average share cost. So I'd like to keep my average share cost below that. But see how I'm still below that, $68.74? So I can still add to SYY until I get to $71.57 if I want. Procter & Gamble, same thing. My cost basis is so low, $145.23. Well, 15% of a 52-week low is $162.66. So I could add to this right now while it's close to 15% of a 52-week low, right? $168. Maybe bring up my cost basis a little bit, but that's all right because my cost basis is so low, right? Now let's run through here. Since this is a little late, I don't want to get too long-winded here, right? The ticker symbols here, all the positions in the portfolio, total shares as of the close of business last Friday. Current price as of the close of business last Friday, market value as of the close of business last Friday, average cost per share. This is what my average cost is, right? And we just talked about I want to try to keep my average cost per share in line or lower than 15% of a 52-week low, preferably much lower than, so that I can add to some positions whenever they run up. But time will take care of that, right? This average cost per share isn't going to change much unless I add to positions that are higher or lower, but this 15% of a 52-week low will change over time. My purchase price, so how much I have into each position, and I will say this is also reflects dividends reinvested. Total return, whether I'm up or down, you'll see it here. Same thing, this is a percent return, whether I'm up or down, you'll see it here. Obviously, the darker green means I'm up significantly, red means I'm down. What sector each position falls in, whether they're a quarterly, monthly, or semi-annual payer. You notice most of them are quarterly payers. One monthly, which is Realty Income, the dividend monthly paying dividend REIT here. Semi-annual here, and current yield as of the close of business last Friday. My yield on cost in this column, portfolio weighting. So what we saw on the previous slide was each sector's weighting. This is each individual position's weighting. Estimated annual income from those positions, payout months, dividend growth year over year, and again, where it sits at 15% of a 52-week low. I think we've accounted for that, so I won't touch on it. Now, currently, total shares, 5,827.178 shares. Market value, as of the close of business last Friday, $311,795.15. I have $274,935.49 into the portfolio. Again, keep in mind this does account for reinvested dividends as well. Total return currently up $36,859.66. Nice to see, but that's not what I focus on. Up currently 13.41%. Again, nice to see, but not what I'm focused on. Current yield 3.831%. 4.344% is the current yield on cost. And this is what I'm focused on, the estimated annual dividend income. That's why it's circled in red. The dividends paid out by all the positions in the portfolio. And this goes up, or hopefully goes up, monthly, quarterly, yearly, as I add new capital, as the positions in the portfolio increase their dividends, as they pay out dividends, and those dividends buy more shares, and currently sits at a new record, $11,944.22, getting very close to $1,000 a month. Here, I will say I'm probably going to make some changes to the overall portfolio. Bank of America is one I am really considering taking the profits and reallocating elsewhere. We'll see if that happens this week or not. But I am going to, I would say by the end of September, definitely be in the $12,000 a year range or more, with that goal of $1,000 a month in passive income. And then the next goal will be, $2,000 a month in passive income. Now, dividend growth year over year, 5.95%. I'd like to get that up a little bit. Some of these positions that are not raising dividends, I'm not concerned with BABA. Similar to Google, they just started paying out dividends this year, so I'm hoping for double dividend raises, but we are going to have to wait until next year. I know it's highlighted in yellow, but that's actually because they paid out twice this year rather than a dividend raise. It was a second payout for the year. Same thing with Google. I know it shows a 0 here, but we'll soon find out in 2025 what their raise is going to be. Some of the ones that have not been raising their dividend, I would like to start again. Ally Bank, whenever I first bought this one, they were raising their dividend. They have since stopped over the last couple of years. Now, the yield on cost is so high at 4.6% because I bought them so cheap. So I'm willing to hold until they start raising that dividend again for at least another couple of years. Hopefully they start again. And another one, KHC, is another one that when I bought it, they were not raising the dividend. I knew that going in, so another one I'm willing to hold, but I have been holding this one for 3 years. I would like, within the next couple years for them to start raising that dividend again, or I will look to reallocate these funds elsewhere, probably just take it and, distribute it across the portfolio or something. We'll see. OHI, I'm not concerned with that one. They're not raising their dividend, but their yield is so high. My yield on cost at 9.32%, current at 6.8%. So that one I just treat as like a bond, a high yielding bond in the portfolio with some price appreciation, right? I'm up 36.96%. So I'm okay with that. I'm okay with a 9%, over 9% yield on cost and up 36% on that one. I'll hold that one. Not a big deal. AT&T, I knew that going in. They haven't started raising their dividend again. I'm hopeful that they will now that they've got their debt kind of sorted out. Union Pacific had paused theirs for a little bit. They did start raising it again, but man, such a small raise at 0.77%. I'm hoping for a little better than that. Well, that is really it for this one. Again, I don't want to make it too long since this is a little late getting to you. Let me know what's going on in your portfolio. What positions paid out dividends last week? What did you add? Did you add any positions? Did you sell any positions? Are you looking to sell any positions? Are you running options? If so, what positions are you running options on? Would love to hear from you in the comment section down below. And that is it for this one. That's the most recent picture of the backyard. As you can see, we've closed up the pool for the year. I actually got to get out there and drain the water out of some of these toys for my kids so we can put it out in the garage. But that's what it looks like. Starting to head towards fall. Won't be long before the leaves start to really turn here and fall off the trees. And then hopefully the lake freezes over and I can do some ice fishing. But as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments down below, so drop a comment. Let me know what you think of the video. let me know what you think of what I've purchased in my portfolio. Any questions, go ahead and drop them in the comment section down below as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.